Hello and welcome back to the Thrive and Prosper podcast. I'm your producer, Zach Ritchie. Today we put a pause in our series of interviews and come back to funding education. So sitting here with me today is once again Mr. Ari Page, who's going to be going over quite a few topics that all entrepreneurs need to be familiar with to ensure their success. On our docket today, I see 5 different ways that you can fund your business. I also see the actual living proof of what Mr. Page and Fund&Grow can do in terms of business credit building. And finally, a listener-submitted question: how can I effectively scale my business using credit cards? There are some tall topics here. So without further ado, Mr. Page, please take it away.
If you're launching or expanding your business, securing funding is likely a top priority. But with so many funding options available, it's easy to get lost or confused about which ones are best suited for you and your business needs. That's why we're exploring 5 ways to secure the funding you need to kickstart or grow your business in 2024, along with the pros and cons of each. In case you're new to the channel, my name's Ari Page, and I'm the CEO of Fund&Grow, a company that specializes in helping entrepreneurs across all industries get access to funding. So whether you're starting a brand new business in 2024 or you're an established business looking to expand, we've got insider tips and strategies to give you all the information you need to confidently choose the perfect funding option for your business. So let's jump right in and explore the 5 best ways to fund your business in 2024. Now, the first method we're exploring today is the SBA loan, which is a secured form of capital that comes from an agreement between the lenders and the U.S. government's Small Business Administration, also known as the SBA. Now, an SBA loan is secured. So what does secured mean? It means the funds you receive are backed by collateral or the assets that you plan to purchase for your business with the loan, such as real estate equipment or inventory, to name a few examples. Now, lenders are more willing to approve businesses for this type of financing because the SBA shoulders a lot of the risk, since they guarantee a portion of the loan will be repaid should the borrower default. So it's a lot less risky for the lenders. Because of that guarantee, lenders can offer more flexible payment terms and lower interest rates than what's usually offered to new businesses. For instance, as of December 2023, businesses can expect interest rates between 11 and 15%. Some of the pros of SBA loans are that they're designed specifically for small business owners and can be used for nearly any business need you have, whether it's via startup costs, equipment, working capital, or real estate. But on the downside, these lenders look at your personal and business credit to qualify you for the loan, and they require you to be in business for at least 2 years. So if you just opened your business a month ago, you won't qualify. Also, these lenders are very particular with the businesses they lend to. So you may get denied just based on the nature of your business or where it operates. Long story short is SBA loans have strict eligibility requirements and a lengthy application process, which may not be suitable for urgent financial needs. And with the 2-year minimum time in business requirement, it isn't a feasible option for brand new businesses. Now, the second option we're covering today is your traditional business loan. When it comes to this type of loan, you'll be turning to trusted sources like banks and financial institutions. These loans don't enjoy the same government backing as SBA loans, but they've stood the test of time and continue to be a go-to option for many business owners. With this option, businesses receive a lump sum of money that they pay back over a fixed period, which can be as long as 10 years. Like SBA loans, one thing to be aware of is that traditional business loans will require collateral to give them that extra peace of mind that their investment is protected. However, with traditional business loans, businesses do get flexibility in terms of loan amounts. So whether you're just starting out or looking to scale, these loans can be customized to suit businesses of all shapes and sizes, and approvals can be anywhere from $5,000 to $1 million. But hold on, folks. Before you rush to the nearest bank, there are a few things you need to know because these loans come with their fair share of challenges. Lenders have strict eligibility requirements, meaning you'll need a solid credit history, stable revenue streams, and a bulletproof business plan. It's all about proving to lenders that you're a reliable borrower and you'll be able to repay the loan. And here's the reality. The approval process for traditional loans can be a bit of a marathon, so you should be prepared for meticulous assessments, extensive documentation, and close scrutiny from the lenders. Now, let's talk about the elephant in the room: interest rates. In 2023, we saw interest rates across the board skyrocket. And as of this recording, you can expect to pay anywhere from 3% to 48%, depending on how risky the lenders deem you and your business. Also, we must revisit the collateral requirements. If you fail to make those payments on time, there's a risk that the lender may seize your collateral. So if you go this route, it's paramount to stay on top of those repayments and protect both your business and its assets. Now, let's take a closer look at the third option: venture capitalists or VCs. Venture capitalists are investors who provide capital to promising startup companies with high growth potential, innovative ideas, and a strong vision for expansion. VCs can also offer valuable expertise, advice, and connections which can be instrumental in propelling your business forward and opening doors to new opportunities and partnerships. However, we must acknowledge the downsides of partnering with VCs, one of which is the amount of equity they typically require in exchange for their investment. VCs often demand a substantial ownership stake in your company, as much as 50%, so you should be prepared to give up some control of your business if you go that route. You'll also have to involve them in important business decisions like strategic direction, major hires, or even day-to-day operations. This loss of control can be challenging, particularly for founders who have a strong vision and prefer to make their own independent decisions. Lastly, it's worth mentioning that securing funding from VCs is a highly competitive process. VC firms receive countless proposals and only a small fraction get chosen. This means you'll need to dedicate significant time and effort to crafting a compelling business plan, pitching your ideas, and standing out amongst the competition, which can take months and doesn't solve your immediate need for capital. Number 4 is perhaps the most competitive option, but it is loved by businesses because it's the capital that you don't have to pay back, also known as business grants. Business grants are awarded to businesses by government agencies, foundations, or private organizations to stimulate economic growth, promote innovation, and address specific societal or industry needs. Unlike loans or investments, grants do not require repayment, making them an attractive funding option for entrepreneurs who want to avoid debt or diluting equity. But it's important to note, securing a business grant is a highly competitive process with eligibility criteria and strict application procedures. Grants are typically awarded based on merit, feasibility, and alignment with the grantor's objectives. Some grants may even come with specific reporting requirements or restrictions on fund usage, so it's essential to review and understand the terms and conditions associated with each grant opportunity. As I mentioned before, most grants are limited to uses involved in economic growth or research, which removes this as an option for many industries like e-commerce or real estate. Another factor worth considering is that since the funds don't have to be repaid, businesses may struggle to find a grant that gives them the amount of capital that they actually need to run their business. This last option is by far the best option in my opinion, because it combines many of the advantages of other funding methods we discussed without most of the disadvantages, offering business owners an all-around beneficial solution. So I'm talking about business credit cards. Business credit works like personal credit cards in many ways, but they offer higher credit limits and better rewards specific to business expenses without reporting to your personal credit reports. But one of the biggest perks is that they're revolving accounts at zero interest. So you can max out the card, pay it off, then use the funds time and time again without paying interest for like up to 22 months in many cases. And it's important to understand that business loans and investors won't allow you to do that. It's a way to constantly have working capital to use in your business, and you only pay what you use. So if you have $100,000 in credit available, you don't immediately owe the bank for $100,000. If you use $20,000, you only owe for the $20,000 that you've actually used. The main benefit of using a business credit card is the convenience and flexibility, since it can be used for nearly anything your business needs. You can pay for equipment, materials, inventory, vehicles, and even investment properties. There are also no financial documents or collateral required. You don't need to be in business for 2+ years to qualify, and you don't need to explain to the banks what you plan to use the funding for, making it a great solution for startups and seasoned businesses. Oh, and did I mention the perks? With business credit cards, you can earn cash back and rewards on your purchases, which is an incredible benefit you won't find with any other funding option out there. Now, if you're thinking, well, Ari, that all sounds great, but that won't work for me, I'm here to tell you that it will work, because we've worked with over 30,000 entrepreneurs with all different circumstances, and we got them the funding they needed. So I know this will work for you, and I'm going to link a video in the description for you where I'll show you how it will work for you. I'll show you the strategies we use here at Fund&Grow to get entrepreneurs access to up to $250,000 of this type of funding, even when the banks have declined them. That way, you can do it for your business and get access to the funding that your business needs in 2024. So if you're interested in that training, it's linked below for you, and it's free to attend. There's no charge, so be sure to check that out. And there you have it, folks. 5 ways to fund your business in 2024.
If you've been on YouTube for more than a few minutes, you've probably come across countless unboxing videos. And in all those videos, you're watching someone unbox something that, if you go out and buy, it's going to do what for you exactly? It'll cost you money and likely end up on a shelf or a closet, completely forgotten about in no time. Never has there been an
unboxing video where the contents inside actually make you money until today. I put my money where my mouth is and just finished a round of funding with the Fund&Grow team. And so in today's unboxing, I'm going to unpack and show you everything that you get with this program and answer some of the most frequent funding questions out there. Now, before I start opening these envelopes and showing you the funding, let me give you a quick background of why I went through the credit stacking program again and what the beginning of that process was like. So I've gone through the program a few times and I wanted to revisit applications for new credit because my zero interest was running out. And like you, I wanted to avoid paying interest. And at this point, you may be wondering, is this program something you just do once or can you come back for multiple memberships? This is 100% something that you can do more than once. Just like in my case, we have countless clients who come back time and time again to get more credit and get new 0% offers. It's called card stacking. On the other hand, we have clients who just go through the program once to use the cards as a short-term funding solution to kickstart their business. So it can go both ways. It can be a long-term or short-term solution depending on what your business needs. When I was ready to do another round of funding, the process was very straightforward and fast. It was a matter of a few days between me telling the team I want to get started and the start of the application process because there's a queue. I had to get in the queue. Now, this may differ slightly since I knew what our process was. So immediately I had filled out all the client portal and all the documents and I had my credit report in the best shape it could be before submitting my information because I'm an expert at this. So I started the Fund&Grow process on December 13th and by December 15th, I'd already filled out all of my information. I had talked to my account manager and started the application process. From there, we launched applications and over the course of 1 week, I received some initial emails from the banks that I'd applied at, most of which were automated computer decisions that I communicated to my account manager, and they got started working on the negotiations on around December 20th. So this is the really cool part of the process where you might say the magic happens, and it's with our negotiators. So what they're doing is they're calling the banks on your behalf and speaking to the underwriters. Sometimes they have to stay on hold for hours just to get through to the right person to overturn any initial declines that you might have or to get increases on the limits of any approvals that came in. As of this recording, on January 11th, I'm still in the negotiation process and probably will be for another week or so just to make sure that we're really maximizing each one of the cards that we applied for. So now let's get to the actual proof in the pudding. Let's look into the actual business credit cards I've received through Fund&Grow's credit stacking program. First up, we have the Bank of America card. This account I had received, it's already came in with a credit limit of $15,000 with a 9-month offer. So here we have it right here. And so my negotiators have already been provided this information so that the negotiators may move my negotiation on the specific account forward. So far it's at $15K, but they're going to get this boosted up to, who knows, we could get this up as maybe to $25K to $30K, $40K. So the next one that I have is Chase. And so Chase was approved for $35,000. So I'm going to go ahead and pull out the Chase card. It was an Inc. Business Unlimited card. This was initially approved for $30,000 actually, and our negotiators have already been in contact and got this one up by $5K, so it's up to $35,000 at 0% for 12 months. The negotiators are more than likely going to be able to get this one popped up even higher. So here's the card agreement with it. And they're giving me how I can get all my cash back and get cash off the card and so on. Our negotiators are going to continue working on the Chase card and get this one approved for hopefully $50,000, $60,000. I have other cards that are around $100,000 with Chase. They could probably get this one up to that as well over time. We are at our American Express card now. And the American Express card has been approved for $25,000, 0% for 12 months. People really love American Express. They like that idea that it's this higher end brand. They give the card holder a lot more benefits. Their charge back is a lot easier. American Express is a really unique company. And so having good high limit American Express cards, it really goes a long way with the other brands for them to know that if American Express gave you a $40,000, $50,000, $60,000 card, then you are a safe bet. And it's likely you're going to get better approvals through other places. All right, so the next card we have is the GM card, the Goldman Sachs card. So it came in with a $40,000 approval, 0% for 12 months. And this card here definitely, the team is telling me, is going to be able to be kicked up to a higher amount because if it came in at 40 and I have other cards much higher than that, then they'll be able to get this one kicked up. So the last card that I applied for was the Truist. Truist is the name of the bank. It's not like the Truist. It might be the fakest of all of them for all we know because they declined me. Now, they declined me based on saying unable to verify client identity or business existence. Now, this is a beautiful thing to get the client for, because guess what our underwriters are doing? They're going to call and they're going to verify the client's identity. They're going to verify the business. The easiest thing of all for them to ask about. So the Truist card has been declined so far. The Truist card's going to be overturned. I'm very confident of that, and I'm going to be able to give an update on this in a week or so once that's happened. And so far, we're at $115,000 in zero interest credit so far, bringing me to a total of nearly $600,000 in business credit after adding it to my existing accounts. So from here, I'll discuss the cards with my account manager, who's the one doing negotiations, and they're going to work on overturning that Truist decision and attempting to increase on all of these new approvals. All of them can be boosted. So now keep in mind, this unboxing has only showcased one part of what Fund and Grow can do. Between creating entities, do-it-yourself corporate credit with Dun & Bradstreet, premium business coaching, credit consultation, and even sharing how to use credit as cash. There's a lot that Fund and Grow members receive over the course of the 12 months other than just what I've unboxed here. Now, you might be wondering, how can I get in touch with the business development team? Because I want to. No, I need to get funding now to move my business forward. Guys, if you want to see if you're pre-qualified for funding and see if you're ready to move straight into funding, I dropped a special link for you in the description to schedule a free pre-qualification in consultation with our team. See how much funding you qualify for it. Discuss how business credit can be used to 10x your growth. So be sure to go to that link in the description and book your call now to get started right away. And there you have it, folks. The Fund and Grow membership unboxed. I hope you're as pumped as I am about the endless possibilities that come with this membership and the fast injection of capital it can give your business. If you found this video helpful in breaking down the process, please like the video and subscribe to the channel to keep growing in your entrepreneurial journey and help us grow. Also, if you have a question that I didn't cover today, please drop it in the comments and we'd be happy to answer any questions you have or even make a whole video on it. You know, one of the most common uses for business credit is just running everyday operations and keeping things afloat for your company. But how about using it to take your business to the next level? Let's say your business is running efficiently, your customers are happy, and your sales are at a decent volume, but you don't have enough capital left over to dedicate to expansion. Well, I'd recommend not going out and just randomly applying for another loan. Instead, use unsecured business credit. So unsecured means that it's safe credit. But let me show you in more detail exactly what I mean. Number one, use extra cash back as extra cash flow to purchase items that'll help you grow. Cashback rewards is one of the many lucrative benefits you receive when using business credit. And you can use the cash back the lenders give you for anything that your business needs, whether it's buying another truck or renting another storage warehouse or even increasing inventory or upgrading equipment. And you might be asking, well, Ari, how much spending do I need to do to earn a substantial amount of this cash back? Well, if you're putting everyday business expenses on these cards, that amount will accumulate pretty quickly. I mean, here at Fund and Grow, we receive thousands of dollars every quarter simply by paying for things we already have to cover, such as our electric bill, office supplies, and you can literally see here that every couple months we're accruing about $5,000 or more that we can invest back into our company just from our normal spending that we've got to do anyway. And it's not like we're going on a shopping spree to acquire this type of cash back, folks. This is just from buying things that our business has to purchase that we'd be picking up regardless, like your electric bill. So number two, save money by avoiding interest payments. So another reason why entrepreneurs, myself included, use business credit to scale is because it's at zero interest. This means there's an introductory interest rate of anywhere from 6 to 22 months at 0%. So this initial 0% period is crucial to growing your business because, again, it gives you access to funds you'd otherwise be paying interest towards. So instead, your monthly payments go straight to the principal to wipe out the actual balance much faster than if only a fraction of your payment was being applied towards the balance and you're just paying mostly interest. So any other funding method you use to fund your business, whether it's a business loan or some kind of investor, you're paying interest and huge closing costs on the amount you borrow, but not when you use business credit. So if you're following along so far, head over to the comments area and let me know what's the first thing you would purchase as an investment if you suddenly had access to hundreds of thousands of dollars of this type of credit that we're talking about. So, number three, hire a marketing agency or invest in an in-house marketing team. So using business credit to hire or pay for marketing expenses, it's really one of the best investments you can make in your business. And depending on the size of your team, it may be more feasible to actually outsource this option. But If you have the space to hire in-house marketing professionals, you could go that route as well. And either way, marketing is a great investment to increase sales and volume. In fact, it recently came out that 86% of small businesses have increased their brand awareness by utilizing digital marketing channels alone. So this 0% business credit runway allows you to establish healthy and revolving access to credit that gives your business room to focus on this new marketing growth. Point number 4, increased spending power. And I think every entrepreneur has found themselves in a situation where an amazing opportunity presents itself, but you didn't have the funds available to act on it. And with this type of funding we're talking about, you'll never have to encounter that kind of situation ever again. And unlike many other options out there, business credit is actually revolving and you can use it over and over. So you can spend your credit limit, pay it back, then use the funds all over again. And many of you may be wondering, well, what if I need to buy something or pay someone that doesn't accept credit cards? In that case, you can actually utilize a payment service like Plastic, which allows you to access your card as cash. You tell them where you want the funds to go. You pay a 2.9% fee for their service, and they send a wire or they send a check or an ACH payment on your behalf to whatever vendor you're trying to pay. You just swipe the card and they send a wire. It's so easy, much cheaper than a cash advance. And I personally use Plastic to purchase rental properties and pay contractors. So I can assure you that this process works seamlessly. And having access to this type of financing will ensure you have the funds ready to go when a potential profitable venture comes your way. Not to mention, you can regularly receive increases on these cards to maximize your spending power even further. Point number 5, training and networking. We've all heard the saying, knowledge is power, countless times, but it couldn't be more true here. By taking time to attend trainings, mastermind groups, and other networking opportunities, you invest in yourself and your skill set. I can't even tell you how much I've learned from the mastermind groups that I'm a part of, and it's definitely a mutually beneficial relationship. They're investing their knowledge into me, and I'm investing my knowledge back into them. So we're helping each other improve and find better ways of doing things in our businesses. And you can leverage business credit to pay for expenses associated with attending trainings and mastermind opportunities. You can even send your team. So not only are you avoiding paying out of pocket for these things, but you're also earning cash back by going to masterminds and building your company. So the strategy is everything in business, and using the tools you already have available is the simplest way to grow your business. I don't know any reason why an entrepreneur would not want access to business credit. So from that same philosophy, I've created an entire masterclass that will teach you how you can access up to $250,000 of zero interest business credit and in a relatively short time frame. So I'm giving you free access to this training where you'll learn how to ensure you are in perfect lendable position to get approved, how to properly structure your business entity so it doesn't send off red flags to the lenders, how to identify and correct any negative items on your credit report that are not visible to you, and a lot more. So check in the description below for the link to join the masterclass now. Now, as always, thank you so much for joining me. I'm Ari Page, and we'll see you on the next one.
Warning: the financial insights shared on this platform reflect personal viewpoints and are not expert advice. Fund&Grow, its staff, and agents are not liable for any results from following these insights. Take time to do your own research or consult a financial advisor for professional advice. Decisions made based on Fund&Grow's podcast content are solely at your own risk. Since 2007, Fund&Grow has helped over 30,000 business owners and real estate investors across America get access to over $1.6 billion in growth capital. We're on a mission to empower entrepreneurs and investors by helping them utilize the smartest form of funding: low-interest, unsecured business credit.